Everybody, act right. We're on YouTube. Act normal now. Come on. Oh, hi, YouTube. How are you doing? Welcome to Bullish Bears. We are here live on YouTube. We are looking at stonks.
My best Dr. Nick. Hi, everybody.
Where's Squidward? Okay, we are in this area, in this zone right here. Look at that. We are just right in that area of interest.
Say, hi, Dr. Nick.
Oh, hi, Dr. Nick.
Hi, Dr. Nick.
This is a 15-minute chart. We're at the 200, 15-minute 200 right there, which is about where VWAP is. We're coming up to this area here, and that is about, yeah. This is, we're going to see. This is another spot. All right. All right, bullish calls. You better be good.
Damn.
382. I ain't saying nothing. I ain't saying nothing. You ain't saying nothing. James Brown's always fun to play. I like that, by the way. I love all those old guitar parts like that. I'm a parts guy, although I can do some other stuff, but I like parts.
Started farting around with the scale video I sent. So,
Dude, that's my favorite scale. That was like everything Ray Charles played was built off of that scale.
yep.
It's just 5 notes.
It's got 5 roots.
You add a couple little half steps in there, and you do all kind of stuff with that thing. ABBA, we're talking about Ray Charles, and you bring ABBA into the conversation. Hang on a second. Hang on. Where are you from? I'm just teasing you.
Up the wall. That's a good one.
Was ABBA named ABBA because that's what they used.
Oh, that's the form. That's the form. ABBA. And if you listen to Genesis song Abacab, that was a form too. That was a form because it had the C in it. The C section. ABAB is verse, chorus, verse, chorus. Then you get the C section. The C section is usually the bridge.
Right, right. And then
Or the middle eight. They'll call that the middle eight too.
a dozen bass boxes in between. And,
Oh yeah, it's all kinds of good stuff, man. I told you I used to play. I used to. What is that song? Oh, or on YouTube. I gotta be careful with that. Hang on a second. I gotta be careful about that.
you get
Lady Marmalade. Remember Lady Marmalade? That song?
Oh yeah.
Yeah, that was. Yeah, yeah. That. You Lady Mama. Yeah, I played that song, and
You do practice your voice.
who me?
Yeah.
Not before today. I haven't practiced it in a while. That's
Have you like practiced your voice and your accent and stuff in the past?
and my accent.
Well, the way you, yeah.
Yeah, I used to try to speak very normally and not have any accent at all.
All right. Okay.
Yeah, I did some voiceover work, so I
Okay.
had to keep that in check.
Yeah, I need to start doing that. I heard myself the other day. It's like I can't keep it sound like.
You sound great. Everybody hates their own sound of their voice. Everybody hates most people hate the sound of their voice.
You get used to it. Not that you
yeah, yeah.
like it.
Uh,
You get used to hearing yourself.
Here it is right there. Look at this 5 minute. Watch this. Look at that. Sometimes you get this look.
Most of your,
Hammer,
most of your ear
invert it.
through your skull and doesn't
Yeah.
come out as sound from the air back to your ears.
Nope.
Yep, exactly.
That's reassuring. Thanks, Jeremy.
Sounds different.
Here at Bullish Bears, we talk about everything. Tell that to Mariah Carey. Mariah Carey likes a recorded voice.
And then we'll compare analysis. Okay, my voice does this sound, so this chart is going to be at this fib level. All right.
What happens is,
We can relate the chart to music.
yes, you can. You absolutely can.
You can see upbeats, downbeats. We see it all in the chart.
It's listen. This right here. This is a song. There's a melody right here.
And you know,
That's exactly right. We have some that are a little bit more short and staccato than others, and we have those legato notes. They're right there, man. They're awesome.
all in the chart.
Okay, so we're gonna push higher. That's what it looks like, unless this double tops right here.
There's a parabolic channel involved here too, so and it's sticking out of a previous megaphone pattern. So this is right at the point. If it's gonna tip over, this is where I'd expect it to do it right here.
Might not. I was suspecting this overnight.
382 has been that key pivot for
Yeah, ever,
this.
and we're at it
This
again.
parabolic channel, tested it. This is twice now.
You
Rejects
dogs.
here, it's going to reject hard. If it blows through, we'll get a measured move out of this all the way up to 384.85.
It's got to break out of this area right here. This box that it's in, this little shadow box. It has to respect that. All right, so here we go. A little penny stock. You got to love them. This is, if you're a penny stock trader, this is what I talk about all the time. Is that when you get a pop after a period where stock has laid dormant for a while. Although this guy's got pretty good shape. Not a lot, really. Let me go there. Yeah, when you get this big old pop after you've been down here for a little while, then one of the things that I like to do is pay attention to them for for a few days, because here we had this pop. That's the first pop it's had in forever. So it still hasn't breached that high of 824 from the pre-market of yesterday. Will it do that? It's possible. But my point is this. Don't take it off your radar. Keep it on there. There's still trades to be had for at least today and maybe tomorrow. But at some point, this is a therapeutic company. What we're going to see is some sort of dilution where they make an offering and add more shares to the kitty. When they add more shares, that's called dilution. And when they do that, it brings the price of stock down. It's like a huge sell-off. So at some point, they're probably doing that because it's a therapeutic company. The only way they have to raise money is for research is to do this kind of stuff. So, or it's one of the ways, that and grants, but this is how they do it. And that's why they give you news about Uncle George going down somewhere to, put down some kind of FDA thing. So they got another push today where somebody had put their price target to $13 from 10. That doesn't mean squat, but it means that somebody out there is buying this thing, right? So you just have to be careful because I believe they're going to dilute it in the next day and a half. But if you'd have followed, some price action principles that you might have laid out, like I had laid out for me this morning, if I were going to trade this, this is my red line. This was my last chance for romance spot right here. And so that's a box I drew, my shadow box, and then I made it red. Bam, right into it. I drew that line way before any of this happened. And bam, it right into it. That was the spot to get in. Boop. You could have got all that from 6. You could have got like $1 move on this thing if you'd have swung it and hung in there. You got to have the fortitude to do that though with a penny stock. You could also scaled in. So, but pay attention to that. You got these double wicks right here. It might be it for right now. It's also at a pivot, so look for a pullback to 720 or so.
Here's your break on SPY. Just out of that channel now.
Hey Jeremy. So I got myself on a terrible trade earlier, and I did your techniques of legging in and out on selling spreads throughout the day on that particular position, and I've managed to whittle it down to a much smaller loss. To like, I went from like $70 loss now down to 30, and I still had that position open, and I can still do trades against it. So thank you for teaching me how to kind of wiggle in and out of a bad position. That's been really awesome.
Awesome.
That is awesome.
Yeah, because I put that position on to hedge against my other long positions, and then when it went against me, I was like, oh no, what do I do here? And then I was like, wait a second, I can actually sell, higher premium. If we keep going up, then I'm collecting that premium and I can buy it back. And so I've been wiggling my way slowly down. So I went from like what would have been a $75 loss down to right now I'm at a 46, and that's helped reduce that hedge against my long positions, and my long positions are running. So it's been really awesome. So I've been able to like kind of neutralize my what you would normally do, where you have typically you'd have a long and a short on one position, and I'm doing it with different positions now.
Nice. Being able to adjust an options position is awesome.
Yeah, I've never done that before when I did like straight calls or puts, and this has just been like revolutionary for me. It's so easy to just be like, oh, this ran against me. Let me go the other way and sell this and run that little ride here. Okay, cool. My loss is now minimized. Let me go back the other position, and then if it traces back my way, maybe I can sell something closer to the money, and just keep playing each of the bounds, but keep that one main position still open.
Right. That's why I want so badly to build that little flowchart thing I was talking about.
Yep.
So be able to put into a visual context all the different ways you can adjust an options position. And and the other part of that is a lot of times you can turn it into a can't lose position, and then you can also turn it into can't if it is a losing position, you cap that loss at a specific point if you know exactly where to place the option legs. And also you can whittle it back like you've been doing with the other side of it, other adjustments.
Yeah, so far, I mean, that's 50% of the potential loss off the table now. Like, I can't lose it unless I do another bad wiggle. But if I just sell something now, that's so for it. It's just going to lock in my max loss at something super low. So I'm just like, oh, thank goodness. I'm so glad Jeremy talked about that, because had I not thought like that at the moment when things started going the wrong way, like I could have just seriously blown my account, not really blown it, but like blown my capital that I would use for like swing trades and stuff.
Right.
Just because I wanted to do zero DTE play.
So that's you're selling call
So-
better spreads and puts better spreads at each support and resistance or wherever it seems like it's going backwards on you.
What I've been doing, so I bought a 376 put today at the worst possible time, and then I was like, oh, it ran against me. So initially, I tried to configure some sort of butterfly, and I didn't quite get my the ability to do that through Webull. So I ended up doing two different spreads. One that I capped my max loss at $14, which is not too bad. And then I had that long put at 376, which we may not go back that way. I just don't see that happening. So then what I've been doing is selling closer to the money puts as it's been running up, and then buying it back pretty shortly on these like little spikes. And so I've been collecting $10, $15, $20 here, and it's been reducing the cost of that long put. So what used to be a $75 cost that's probably going to go to zero today, I've gained back about $30 of that from selling puts closer to the money. So what that does in the spread is it locks in a loss on the spread unless I sell more premium than what the spread was, but we have to keep running up for me to actually profit that way. So I've essentially just been, generally just whittling in, but then buying back as soon as I can, so that I'm reducing that cost of that put, hopefully to zero by the end of the day, but if not, minimizing it down to like 15, $20 loss, which is not a big deal. Because I have other long positions that are profiting very heavily on this trend up.
Yes. I'm just trying to make sense in my head. So even if you buy and it's going the other way and then turns around on you again, you can sell it and have no loss because you already have the other one open.
So essentially, with that one that's like a $75 cost of today, I've just been selling puts at instead of lower than 376, which would normally be how you would get your debit spread going, and then selling credit spread the opposite way. So my long leg, which is cheaper than my short leg, and my short legs I've been buying back frequently as we've been going up, so that it reduces my cost on that long put on the 376. So what used to cost $75 now costs me $40. And if I can do it a couple more times, I'm slowly going to get to the point where my max loss for the day on that position is probably going to be somewhere really small. If I'm super lucky, maybe I can get it all the way down to, actually getting a net credit from it, even though it was a losing position. Because I've been turning it into credit spreads on and off, it's been giving me credit.
So are you buying these just because it went backward, or are you watching price?
I've been watching price action, and since I knew that if it runs up, I'm going to lose on that position, and so I was like, well, how do I mitigate my losses? And so I just tap on that position, and then I have an option that says build a strategy on current position. So I tap that, and the only options I have are build a calendar by selling a put or build a vertical by selling a put. So when I hit that, I then look at what is the next strike up from that position. So in this case, it'd be 377. If I sold that right now, I'd get 16 cents, which would then reduce my position another 16 cents, which would bring me into a net loss of like $24. I could sell the 378, and that would give me $20. That's bringing me really close to almost no loss. But a guaranteed loss, if it stayed out of the money still, like in the 380, 381, 379 position. However, if it fell below the 378 position, then I would lose more money. So the idea is that I need to buy it back as time decays off the position, or as we move in the opposite direction if we pump up.
And these are all 0 DTEs, so
Yeah, it has to be, because of that I can only build on a position the same day. I can't like turn it into it. Well, I guess the calendar would let me turn it into something else, but I don't know exactly how that works. I never traded a calendar before.
So the one you initially bought was a 0 day.
Yeah, it was a 0-day put that I bought, and then it ran the wrong way, and so then I started selling credit spread positions out of that, and then buying them back with each pump up, and it's been nice because it's been saving my bacon a little bit there.
Recouping the loss with the credit spread instead of being long on a debit.
So basically,
Right.
the theta drip is saving you.
Well, not just that, but also the delta shift as we run up.
Right, it's both. And
Yeah,
then
I'm thinking that if it's 0 DTE, the theta is rapidly dripping off of it. So every time you get like a nice little pump, you could sell it, and it could keep pumping. But I mean, the theta, you might actually win regardless.
right, because you're knocking off a lot of that loss. And then if you went and did a credit spread, the other side of this, you can actually convert that credit spread, even if you built it into money, you can convert it into a butterfly and usually recoup almost everything that you have risked in that credit spread.
That's what I tried to do, but it wouldn't let me actually create the butterfly directly like that, which was kind of weird. Because it was literally, I had a $2 difference in strikes initially, and then I was like, okay, well, let me sell the one in between.
There it
see if
goes.
runs up, and my idea was I was hoping that the lower position would run up just enough that I could almost sell one leg at no loss. But I couldn't quite make that happen. So what I ended up doing was capping it at 14, which was a good decision because it ran the other way. And then I started losing the premium where that butterfly would have been built on the short legs. So, but yeah, this shift here has been pretty darn good so far. Now I just need theta or delta to keep running up just a little bit, and I'll be all right.
Going sideways right now.
Yeah, we are.
All right, let me. How long we been on YouTube? We've been on YouTube long enough.
Getting closer.
Okay,
Uh,
because they can't hear anything except me on YouTube. That's why I'm asking. Yeah, they can't hear it. The way I've got my system set up, so like all they see is charts when I'm not talking.
Gotcha. So, if you look at your OBS, you can go and I think we went through this before. Where
I
you
th-
raise your
I-
system volume.
Yeah,
But
Go ahead.
Markers, though. It's later on.
All right, well, we'll mess with that a little bit later. Yeah, sorry to interrupt, guys. It's just when we're on YouTube, they can't hear you, and all folks see is just me doing this.
That is all really, really good stuff, though.
Oh, it's excellent stuff. I love hearing it because the Trace is like picking up your style and getting it, and that's great. I freaking love it.
Well, it's
But now you got to have the funds to do that, right? But
I gotta learn from Jeremy on how to wiggle in and
Yeah.
out of these things.
But now here's the thing. Here's the thing. Like you're talking about you've probably got, from what I understand, you've got like a large count, and Bud, you got a small account. So it could be difficult for Bud to do what you're doing if he doesn't have the account sizes. Am I right on that?
No, because the spread that I built out, like the collateral is off of the one contract I already paid a debit for. So I paid $75 debit to enter a position. That position is most likely going to burn to zero today, and so I've just been trading, opening up a new spread, selling another contract against that one to turn it into some sort of credit spread. Sometimes the credit is less than what the position cost was. In fact, most of the time it is. But then because we've been pumping up here and there, that short that I open up has been devalued, and then I can buy it back at a cheaper price and then open another one. And as I've been doing that, it's been letting me whittle down that cost basis on that bad position. So like right now, according to Webull, I'm locked in at a negative 44 loss on that position because I sold another credit spread. But that credit spread just went into the money. So if I buy that back, it's going to reduce the cost of that initial put. And so if I keep doing that, I keep having a lower cost. And the idea is, as long as we don't tank super fast and ruin that short position on the long put, then I'm okay.
I got that, by the way.
Cost.
I got it I got it to where everybody could hear it. I figured out a way to do that. So
Awesome.
so what was, if you don't mind me asking, the bottom line on how much capital did it take you to do that?
Well, because I opened it with a buying a put, the capital was literally the $75. So I just needed to have that in my account, and then I can sell options against that particular position.
Okay.
So anyone who had at least $75 could have gotten in this terrible state where they're most likely going to burn that 75 to zero, but then they can start selling short legs against that using price action and theta to then turn around and buy this contract back as the moves work with them and reduce the loss on that position, or maybe even bring it down to zero. And if you're lucky to do a lot of trades, you might actually get it so that turns into a credit, which would be hilarious if that happens to me, but I don't think that's really going to happen.
That is awesome.
Okay,
And
so
it's just,
Josh says,
it takes a
is it
potentially big loss and cuts it down to a very small loss.
right? But now Josh is saying what Trace is doing would require an account that doesn't have to follow PDT rules, so it isn't something a small account can do, right? That's what Josh is asking.
That's true. Yes.
Okay.
My account is on a account that has a lot of long positions in it. So I mean, it's around $45,000 on this account.
Right.
But so I can do PDT all day long. It doesn't matter.
Okay. That's what I was trying to get to understand there. But that's
Maybe
cool.
one-
Hopefully y'all can hear it. I've figured out a way to. I put my earpiece up to my microphone. Maybe they can hear it that way.
There you go. And then the other side of this, you can do this with a small account, but you're limited to that PDT. So like if you have 0-day trades on record that you can use all three in one day, you can make this work. So it's like you're not completely doomed with a small account. But yeah, it would be better if you could get around PDT.
Pretty cool. Okay, awesome. Well, that's good education.
Yeah, I mean, so with this last position that I put on it so far, the market's not giving me enough price action, but Theta's, slowly taking it down and away for me. So if we can close at, just a short leg, above 38.69, then I get to walk away with like a $10 loss on something that would have been a $75 losing position if I just left it plain and didn't do any of this other stuff.
Right.
I see. Okay.
Yeah, I would. I figured as much. Like I wouldn't even. I have no money in my account. I'm not touching anything naked or 0-day DTE, and I can't sell anything. So yeah, I mean, I understood he probably has quite a bit of money in there.
wouldn't call it.
But if you have an all
just trying
cash
to make sure
account,
we
can
all
you get away
understood.
from the PDT rule?
Overshoot.
Yes and no. The downside is you can't do combinations because it requires margin. It's like you can't do spreads.
All right, now see if we're gonna
Like-
what we're gonna do here on the SPY and the MES.
They make it very difficult for you when it comes to option spreads. So you can be prudent to where you can do 0 days on an account that is subject to PDT. You're willing to day trade doing it, unless, and this is a big unless. Unless everything expires worthless, because then it's just an options expiry. That doesn't count as a day trade. So, like, if you sold a credit spread, you built it at the money or in the money, and it all expired worthless, you keep the premium and it doesn't count as a day trade. If you were to sell a credit spread and then buy it back to close it, then it does count as a day trade. So, and the other thing is, a lot of people don't understand, if you're selling one leg and buying the other leg, and then you go to close it, you would think that it counts as 2 day trades, one per leg. It does not if you open the whole position at once.
Right.
Like if you open it as a credit spread initially, both legs at the same time instead of wiggling into it, then it only counts as 1 day trade to close that whole position.
Cool. But now credit spreads, they're a little bit more dangerous, right? Those are the things that you can get assigned on.
You can, and you'll temporarily, if you have a small account, like if you were trying to do credit spreads, 0 day credit spreads on SPY, and you got assigned, I mean, you're going to be temporarily showing a drawdown of like $38,100 currently if you sold it right here at the money and it got assigned on you, just as an example. It'll show that temporarily until you exercise your long call or your long put or whichever long position you had in that spread. You can only ever lose the width of the spread, minus the premium that you get for the credit. So, like if you open a dollar-wide credit spread for 98 cents, your risk is $2.
Wow.
And yeah, you can do that with a small account, but I mean, you got to be damn quick on that price action. I've done it with a small account, but it's like way easier when you have some leg room with a bigger account.
Right. Okay, it looks like it's trying to come back from that area of rest, almost as if we're starting to get some sort of an M-top.
Kind of looking that way, and it's outside of that parabolic channel too. So
See what happens right here. This is 11 o'clock coming up. We've got one more minute on this 5-minute candle here.
380.75.
Look at all these wicks, man, bottom and top. Let's go check the 15.
But that's that look that they were that Jeremy was talking about that he didn't like.
It just didn't feel right.
It looked like it was atrophying.
We could get a tweezer top on the 15 right here in the next 5 minutes or the next 30 seconds.
Oh, that could be bloody.
And we want to go back down to the 5-minute. Yeah, we saw that. What's our 30-minute look like? Because we're going to get a close on it too. Okay.
Tesla's just sort of hanging out on that regression line.
Yeah, it's just hanging out there right above the Globex high. And at this 38.58.75 that I had marked out from previously. From that, all these wicks right here, you see 1, 2, 3. That's an area where price couldn't get past yesterday. So let's see. They're closed. There it is. It closed. Now, normally, a lot of times that's we're going to get some downward motion after that.
Cracking critical support. Like I said, the three. Damn it, where's the 50%? 380.75 is 50% retracement of that rising parabolic wedge. And super trend is about to flip bearish right here too. So.
Super trend.
Right.
Super trendy. Yeah.
There's your 1 minute on getting 3 black crows.
Boom. Super trend just called it bearish on the 1 minute.
Somebody go
Now-
super yellow.
Looks like an M top there, pal.
I just need one YOLO to actually hit so I can finally start trading with some size. It'd be nice.
All it takes is one to hit, man.
All it takes is one. You're right. I'm right there with you.
I've been waiting for 5 months, and the two I had, I screwed up selling too early. So
Well, I'm right there with you, Bud, because I'm trying to get my little bitty account or options 3 to build too. So
So I mean, you can go for the YOLOs every once in a while, but concentrate on those base hits more than anything.
yeah,
Base hits.
finish
will
your
slowly
article.
Build that account. As long as your analysis is solid, those base hits will add up.
yeah, that's the problem.
It's really hard when you're working a full-time job too. I get it. I've been there. But over time, once you overcome that little hump of having to plan your trades a little differently, it really starts to come together, and you can really just take those little base hits over and over and over again, and they slowly get there.
Yeah,
It's-
I have no idea how to like learn or figure out where I think something's going to go. As far as like leaving in the morning and thinking it's going to hit somewhere in the afternoon, I have no comprehension of that.
Well, the objective we have is we love to trade the short-term charts. We love to teach day trading because all that price action you see on day trading is relevant in every time frame. So like when
Absolutely.
you go to make those long-term trades that it's going to take to get you there, having a job in the way, that price action carries over to every chart time frame. So if you go and you see a swing trade opportunity, but you've practiced the price action of day trading like you've been able to do every morning, it gets you there. It gives you that bit that you need to analyze a chart and know exactly where to take a swing.
Right, right. Because the more you read the chart, and just like I said, sometimes it's just finding, 1, 2, 3. Look, there's VKTX, and we can see this is a bullish run. We've got 1 tap, 2 tap, 3 tap. Go on a daily on something like SPY or Apple. Of course, these guys are much better long-term charts than the penny stocks, and you can see a lot of the same things. I mean, you see this is a big bear trend right here. Looks like we had a pullback there, came back, and this area right here, we're still coming down on this actually. This looks like this is that low of 129, so we might even hit that low today. Could, or we could just bounce back up and go. But it's just a matter of it takes time to read those charts, and
Start time.
yeah, don't sell yourself short. Don't get frustrated, because it eventually you'll get it. It's something that takes time, and maybe it's just more of paper trading than actually putting in real money, and just kind of paper trading in the sense of get a piece of paper, write down what you see in the morning, write down what the chart says, and then write down where you think price is going to go based on that, and doing that until you can actually hone in on it and say, okay, I can see this. Because the greatest thing I ever learned, or one of the greatest things I ever learned, was when Sig said, stocks are only going to do 3 things. They're going to go up, they're going to go down, or they're going to go sideways. And the way we trade and find the price action is we're looking to determine where it's going to go up, what levels it's going to hit, how far is it going to go up, and then, or down, or if we're going to go sideways. And that's what we do every day. We try to figure it out and we follow it. But when you, like Jeremy says, when you bring that in on a granular scale and you start looking at the big picture, you start seeing it. It just takes time, and it's not going to come quick, because you're trying to learn how to follow market makers who've got vast amounts of resources, from finances to people watching the chart to computer algorithms and everything. But here's the thing. All that stuff's programmed by a person. So it's possible to learn how to read it. It just takes a long time to figure it out. That's the only thing. And I know you can get it.
Well, Jeremy, I gotta take lunch now, but what I just did with my last positions is I sold the 379 SPY puts against them, and if we can stay above 378, 60-ish for the rest of the day. I've actually turned both those positions into no losses.
It's awesome. Good work, man.
Great job.
Way to go,
And it's just
Wicks.
It's so scary, man, because when I hit that position and it just ran up on a bull run on me, I was like, great, I literally bought at the exact bottom the opposite trade.
right. It's rough because it looked like it was going to break down. I mean, it did give it that look, and then all of a sudden it printed that 5-minute hammer. It's like, nope.
Yeah, I'm just glad that my brain was firing today to think like, oh yeah, maybe I can wiggle out of this position a bit and start doing some weird spread trades. And oh my god, did it save my bacon?
It's neat how you can apply that, and it takes a little experience at a time. You build it, you learn how the options move, and you can get into that point where you can start adjusting existing positions. And the best part is you can do it without being like anxious about it. It's just smooth and relaxing. It's like, yeah, I know what to do. Boom, you know.
Yeah, I felt much better once I started actually doing that, because I was like, wait a minute, now I can't lose all this amount of money, and that leaves me more capital in the future for other things. And if I can wiggle this somehow into a no-loss position, then hey, I turned a position that was a pooper for the day into a complete win. I mean, it's easier said than done, but when you actually think like that and you maneuver around and you're able to watch that position, it makes things so much simpler. I can't believe how easy it is to wiggle in options and turn any sort of bad position into minimal loss or even better position.
It just gives you so much more flexibility in the position. That's the whole point. And a lot of people are very, very intimidated to go out and learn that stuff. But once you've cracked that cut your teeth, start to understand how everything moves, it just becomes natural over time.
Testing the Globex high.
Just do exactly. You start playing with it. Start making the adjustment. You got to try it first. It's not something you can just go and study and know how to do.
Right, and it costs you money. It's going to cost you money to learn. Yep.
Yes.
Yeah, exactly. And I literally took the worst possible timing too. So I mean, at the end of the day, like that should tell everyone that hey, if you are in a bad position and it's a straight put or a call, try to do some spreads against it. Think about how do you earn more money against that position even as it's slowly decaying to zero. What can you do? Can you sell a call higher or lower strike than where you did before, or in this case a put? Can you sell one that's higher than the one that you originally bought? And if you can do that and then buy it back, it may save your life. But at the same time, like, make sure that the price action is there with you. Otherwise, you're just compounding losses.
Right. That could be the other side of it is compound. I get the feeling that if this breaks this 380.75 zone, it's going to go and retrace right back to the open. So be a little cautious there.
Be cautious. It also looks like it could be a pullback. So because we did get 1, 2, 3 touches, actually got 4 really. But it could be a pullback. Although on the 5-minute, I tell you those that look up here, all these wicks, man.
It can set up for a bullish measure move here, but it's like kind of this is that sketchy feeling that both Sig and I had on this.
And you got to get back past this Globex high, so and back into this level here. All right, we're going to call YouTube. How's that, YouTube? We're going to call you. Thank you. Come join us. You hear, look, you're hearing stuff. Hopefully you can hear everybody talking. We got some good conversations going on here. We got some members teaching other members, teaching us. I like that. I'm still learning about these options. Love the MES, love price action. Come on and join us. Click all the little things down there, like, subscribe, ring that bell. And that's right. And we will see you tomorrow. Goodbye, YouTube.
See you, YouTube.
See you, YouTube.
And done. I just want